Hi, I'm Patrick Nelson, CEO and founder of Nelson Partners Student Housing and Multifamily. We've been in business for nearly 2 decades. We have passed the $2 billion mark in our history in acquisitions and management and development. We have a full construction company as well as a concrete company that builds all of our parking garages for our students to park in and the foundations of our properties. And we have our own property management company of close to 200 employees. We're in 13 states or 14 states, and we manage just over $1 billion of student housing and multifamily. I want to talk to you today about our preferred equity fund, and what an amazing opportunity I think it is. We put it together as a result of talking to thousands of investors over the years. And what so many people come to me and say is, hey Pat, at this point in my career, in my life, and maybe you're retired, I want to put a place where I can get steady cash flow, but I don't want the same risk as common equity or investing and hitting the home run. But I also don't want to make very low income as well, the 4 or 5%, and CDs right now are 1 or 2%. Stock market is skyrocketing. Is it going to fall? Some people say we're in a bubble. There's a lot of speculation. I've got money there already, or don't. I don't want. I just want a nice day-to-day, sleep well at night income stream, and that's what we've created with our preferred equity opportunity. Yeah, let me explain what I mean by preferred. So when you invest into a project, normally you have a lender, and the lender is the first. We call it the first. And when you sell a project, you have a monthly mortgage payment, and then when you sell a project, they get paid first, and then comes the equity. And if you have a preferred equity, the preferred comes next in line, and then you have the common equity. So what's great about our preferred program is we already have common equity in the 6 projects that we have going on right now. And those projects are averaging about 60 to 75% completion, so they're almost done. In fact, 3 or 4 of them will be done in the next 3 or 4 months. So you literally be buying into value, and a lot of the risk, which is the first year of construction and rehab and knowing whether or not the bids are going to come in your projections, that's already all gone and taken out. So we're literally getting ready to sell this summer as the completion gets done on 6 different projects. And here's what's great about our preferred equity fund. Here's what we did. We did a little scale so that if you put in up to $100,000, you get 9.25% return paid, annual return paid quarterly. If you put in 100 to 250,000, you get 10.25. From 250 to 500, it's 11.25, and anything over 500 goes all the way to 13%. And then we have a 2% kicker on the back end when the property sells, but it's not 2% a year, it's 2% per project. So if we sell off 3 projects this year, you'll get an additional 6%. So if you start at 11.25, you get an additional 6%. You're looking at 17%. And the way it works also is that the preferred and the preferred return get paid out prior to even the capital getting paid on the common equity. And the common equity on all these projects is our equity that Nelson Partners already put in, already committed. And that's just because we believe in the projects, we understand them, we know them, we're heavily involved day to day. And so we believe the projects are going to do extremely well. And we already know how the pre-leasing is going for this year. And we think with the pandemic and a lot of people taking deferrals, there's hundreds of thousands of students that are going to be not graduating and staying around, which is going to put a really big demand. And with not much new supply in a lot of these markets. And we've got, I think, 2 ground up projects, one at University of Northern Colorado in Greeley and one at Utah State. And then we've got 4 rehab projects, one at University of Arizona, that's a dandy. We're actually adding a bedroom to every unit, which is just pure income. And I can give you some numbers on that. It's going to cost us about $3,000, $3,500 to build the bedroom. The bedroom will add $600 a month. So $600 times 12 is $7,200. So it's going to cost us $3,400 in a one-time basis, but bring in approximately $7,200 a year of rent. Plus you get additional fees, like parking and utilities. And so when you can make a 200% return on your investment in 1 year, right, and then you divide that by, say, a 5 cap, it makes $16 on your dollar of investment. It's on your net operating income. It becomes very, very profitable. So that's one of our projects. Another one's at University of Denver in downtown Denver. It's a high rise. We've had it for about 5 years, and we've been 100% full every year. And we rehabbed about 70% of the units. Right there, we're about 300 yards from the Auraria campus, which shares 3 different schools, Colorado, University, Denver, the Community College of Denver, and Metro State University all share a campus which has over 50,000 students, and we're about 300 yards away. We're the closest property to campus. That's a terrific project. We've got another one out at Purdue called the Fairway, where we rehabbed all the units, and that project is basically done. We're just in lease up. All the physical work is complete. We added a hot tub there. It looks really, really great. We did all the countertops, flooring, cabinets, and brand new appliances, and just looks really, really amazing. And then, like I said, put in the hot tub, and we did a little bit of paint and work on the exteriors as well. So it's a really, really great project. And then we have one more project that's at Washington State that is kind of a combination where we rehab 2 buildings, and the other 2 buildings we're going to tear down and then rebuild. We're actually going to add 70 beds, and those numbers look really, really strong as well. So those are a few of the projects that are already underway, that are already working, that your preferred money will come in and step ahead of us in terms of your equity. And we've had just great feedback from our investors and what type of structure they're looking for. And this is the same structure that we go to institutional clients usually to get preferred type of investments that look very similar to this. But most people putting in 100, 250,000 don't get a chance to invest in these type of projects, let alone be diversified into 5 or 6 projects. And then our pipeline, we have over 15 more projects down the road that will keep us busy for the next 3 to 5 years, even if we don't add another project. So it's a really, really an amazing opportunity, our preferred equity fund. It's not that big of a fund. So let us know if we can help you or answer any questions. By the way, we invite you to visit any one of our projects anytime, and you can just go there unannounced. If you want to set up a tour, we can do that with our managers. We actually have links as well on our ground up construction. You can watch it being built at Utah State and Greeley. And we're really, really a pretty open, family-run business. So I really appreciate you taking time to tune in, and look forward to meeting you in person. Pat Nelson, Nelson Partners.